Monday, November 18th, market analysis. Stan Ehrlich, good morning. 10:06 California time, about the middle of the trading day, a little bit after. I always start out with the stock market indexes, go to futures, and sometimes go to other stuff like cycles or charting techniques, philosophy, a variety of topics. Picked up a few things over half a century. So I'm still looking for more of a downside correction, as I've been talking about for well over a few weeks. It started a little later than I expected, and it rallied a little bit more than I expected. But we got overbought, and then we're now at the end of last week dropping off pretty sharply, particularly Friday. First level support for the E-mini did not hold, which is fine. And I'm looking really for a downside retracement to 57.26. That's a pretty good support area. And then up normally, and it's not turning out so far to be the case, October is a low. That didn't happen necessarily, not like last year or the year before. And November and December are typically strong months, which is sort of so far in November, because actually the lowest low here was November 4th. And I expect that to be tested and then back up again. So we'll see what happens. Now, the next chart is the 5-minute chart on the E-mini. We hit a little high right up against a small, tiny little bit of resistance, nothing important, but it stopped, and it looks like it's going to start to dribble off and slip a little bit more. It would not surprise me if we closed lower on the day today and even made it lower than Friday's lowest low for this downside correction so far. Next chart is the spider, and the same comments apply, except because this is a regular trading hour, 6:30 to 1 o'clock California time, ETF, we have a gap. That means it's going to try to come down to close that gap at 576 and 3/4. But I'm really looking for the support area at, 565 to be tested for the SPY. And I got no reason to believe this is a significant top on any of the indexes. I've got no reason to believe we're going to start any kind of extended multi-month bear market move. I'm looking for a turnaround and hopefully a buy signal. So far, we're just coming down from overbought conditions. Fine. Now, the 5-minute SPY topped out, slipping back down a little bit. Perfect, just like the E-mini, of course. And we've got the QQQ, same kind of situation, but you'll notice that we've got positions on, except that we got stopped out with the current kicker or the stop setting in our strategy for a really great profit today. Now, I might change this for tomorrow and tell you what I've done in order to stay short. But this particular setting, and it's not a moving average, it's nothing like that, but it's sort of, because if you change the moving average to a larger number, it'll move slower, and vice versa. The short-term moving average of a small number would move much more quickly. So a small kicker is going to move much faster, and a larger kicker, which has nothing to do with the number of bars or days or anything like that, is going to move slower. So I kind of think I moved a little bit too quickly here on one of my shorts, got stopped out today, but the other one's good. Both are profitable. That's not the issue. The issue is I kind of wanted to stay short. So we'll see about tomorrow, and maybe I'll change the kicker and tell you that. Now, we're still in our short positions on the QQQ 5-minute chart. No, I'm not true. Sorry. We got stopped out of both of them. And I did lower the stop over the weekend to trap a larger profit because of Friday's big decline. That's good. So we took a profit on the 5-minute chart on the QQQ on both our ER1 overnight short and our ER3 overnight. Great. No problems. One scalp made a tiny bit of money. One overnight was a very big trade, a really great trade. 3 scalp made a little money, and the 3 overnight did extremely well, and both of them got stopped out approximately the same price because the kickers were extremely close to the same numbers. This morning, we're out, we're flat. I like the QQQ trades. And here we have NASDAQ. We had a sell signal at the top of the market, of course, 1111. And we are out because of this morning's fairly decent rally of our ER3 short. This yellow line was the trailing stop that came down dramatically on Friday, of course, and we got bumped out of it today at around 20,569. Give or take a few points. But a great trade. We're flat. Okay. And the 5-minute chart shows you the detail. Early yesterday afternoon, Sunday afternoon, market started to pop back up and we were pushed out of our trade. No regrets at this point. Currently trading a little higher than where we got out. Next chart. YM overbought conditions topped it out, but unfortunately we didn't get a bearish engulfing, so we don't have an ER sell signal. We did have a great buy signal down here. These red arrows indicate a sell and a sell and a sell. All 3 are on top. All 3 are at the highs of significant downside move, significant downside move, and a significant downside move, while the green is a whopper of an up move, and that's 5 for 5, a whopper of an up move in April. So the signals have been good lately. This one did lose a little bit of money, and that one lost a little money. And I think this one also probably lost a little money. Unfortunately, no sell signal in the last several days. Support doesn't look like it's holding that well, but so far okay. But I really want to break down to 42,000. That would be about right for the YM. Next, same thing, 5-minute chart. Looking for 42,000 down to about here. Not impossible. A little bit of bad news, nothing long term to do the trick. Next chart, the Russell. Overbought conditions in a massive historical resistance area finally topped it out a week or so ago. And now we're just now, Friday and today, coming down to some support, the bottom of this resistance area, because we haven't gotten above it yet. And that would be 2283-ish. But I'm not ruling out something a bit lower, not dramatically. And we've got the 5-minute chart on the Russell. Now let's look at bonds and notes. Well, I'm not getting the bottom that I'm expecting yet. But we do have a lower low today, and we could easily have a bullish engulfing. Unfortunately, it's not oversold, so I'm not going to get a buy signal out of it. But the price is right. The timing is a little bit late, couple of weeks. But this should be, I think it is. So far, it's acting like it. The last low on a giant 2-year bottom formation, which has upside objectives, if this works correctly, at 150. And we are at 116. So let's see it start to make some new highs. I really want to close at 119. That would make me feel a lot better, and that's a couple of 3 points almost higher. Next chart is the 10-year notes, and the same strategy, different numbers, has been oversold, did not get below yesterday's low, which was the lowest low for the move down, but still in the right price range, still in the right time frame, although a little bit late. It was this rectangle that I drew a couple of months ago that I thought the market was going to come down into and turn back up out of, which it hasn't done yet. But I got down as low as I wanted, plus a little bit more. So let's see it turn up, and then I'm going to be screaming bloody murder. Long-term bull move may be starting. Next, crude oil. We got a really nice bullish engulfing today. And I might point out that I talked about it bouncing off of the support level last week. So we're starting a rally now, in my opinion. And I'm looking for a move back up, probably at least to 72.5 and very possibly 75 plus. What happened where's my heating oil? There's something happened. Just a second here. Well, I'm going to skip heating oil for today. My chart goofed up, but I'll have to fix that. Natural gas, good. And by the way, I do know that having looked at this earlier, heating oil, maybe I can do this. No, I'm not getting any more data. That's unfortunate. I don't know why this thing screwing up on me. No big deal. Now, I do know that it had a bullish engulfing today in progress, just like crude. So they're both about the same, coming out of support and having a bullish engulfing. I just don't have my damn chart. I apologize. Natural gas, nice rally, popped up, and I've got to start talking about a small head and shoulder bottom. The low on Friday is around the right price. It's about the same lows we had on October 21. The amount of time since October 21 to the bottom of the market, which is a bullish engulfing ER buy signal, is my little measuring stick here. And it's supposed to be about the same distance to the right. And guess what? I'm only 1 day early. As long as it's approximately within 10%, say, early or late, this is only 1 day. So the timing is very good. Is when we break this neckline, and here's the neckline, we're supposed to start to rally up to a minimum upside objective measuring from the lowest low to the neckline, same vertical line, and you grab your little stick here, put the bottom of it on the breakout day, which is probably not today, but not, but a couple of days from now, and I've already done that. I can see that now. So my minimum upside objective is going to be about 3.5 on the natural gas. Next chart. We've got oversold conditions. We're rallying very, very strongly on gold today. I like what I see on the precious metals. And it too is starting to come out of a little support with oversold conditions, exactly like I see very often. Now what? Well, minor resistance at today's high, previous low right there. But if this is a long-term bull market, which it does seem to be, and I don't see any problem with saying that, I'm looking for a test of the highs of the whole move and maybe even higher. So gold looking pretty good here. It shouldn't get below Thursday's low. That was 25.41 at support, at a bull trend line. If that happens, I've got to start thinking about a little bit different situation here. But it's not coming up really nice today. And so is silver. Nice move up. New high for a few days. Looks like a new high close for a few days. Last 5 or so, 6 today. Going to go up to the resistance area and test the top of the market, in my opinion. Next is copper. Same thing. Oversold in a support area. Started to rally a little bit on Friday, and today, zoom, up very strongly. We got a good sell signal at the top of the market in copper and the top over there as well. 2 whopping big sell signals on the exact high day. Unfortunately, nothing on the bottoms recently. Now, we got high-grade copper. Support, oversold, turned around, rallying strongly today. We are still short copper from the high of the market on the rally September 30th, but our stop is not too far away, right about here, 4.2, to get out of our short. And we might get stopped out. The support level's pretty strong, held pretty darn well. Let's see what happens, but I'm voting for the beginning here of an up rally. We might even have a bullish engulfing green buy signal if we get above yesterday's high. That hasn't happened yet, but it's looking like it's quite plausible. Next, we had a sell signal in soybeans a couple of days ago, and it's rallied up to the new short for the ER3. So we're short a 1 overnight and a 3 overnight, and they're both a little bit of a loss at the moment. Not much. I'm really not, from an opinion standpoint, agreeing with my strategy. That sounds strange to say, but that's the way it is. The strategy sell signal, I think support area is going to end up holding, which so far is correct. And I think we have maybe some significant base building over time building. So I think this is going to be a bad signal, but so far, a little tiny loss. If we break this support level at 977, well, if I'm still short from the signal, well, obviously the signal would be right. But I've got a little juxtaposition here. I think, in my opinion, we're about to start to go up, but the strategy said we're about to go down. Neither one of us is right all the time. Next chart is a sell signal on the top of the market, and soybean oil came all the way down to support area and starting to turn around today, down a little bit at the moment, but a doji inside trading range. I think we're going to turn around, but we need more strength. Support area holding fairly well Thursday, Friday, and today. What about soybean meal? Well, oversold conditions at the bottom of the support area starting to turn it back up. So that looks like it's starting to turn up. I think it's going to go up to at least 302, 303. And let's see what happens after that. If we can blow through that on the upside, we've got a couple of bear trend lines to work with, some previous rally highs, and a lot of resistance areas. So I'll probably fill in some blanks here for some resistance soon. Next, corn. Support starting to turn up. Like what I see. Okay. Neutral momentarily, but I think there's a large bottom formation starting to build. If we start moving above 435, then my upside objective would be approximately 483 for corn. But we got to move up, stay up, close above 436. Next chart, wheat. We've got oversold conditions and a possible longer-term double bottom, maybe. Nowhere near enough strength yet to decide that this past tense is a double bottom. But I do like the fact that it's oversold, stopped going down so far, around very close to, and I think I measured this, about 7 cents from the low made 3 months ago. That's pretty close. Double bottom in the making, I think. And cattle. We got a buy signal yesterday. We're up 28 today. And I meant Friday, of course. And coming along all right. We're in an ER3 long position with a small profit, and ER1 overnight should be doing just fine as well. Looking good. Hogs. And I'm going to move my little designators here. Well, I can do this later. Up to, so we changed contract months to February of 25. No bear signal on top. Came down to support. Not oversold. So not very sure that it's going to bounce that much. I think I'm going to remove that. Kind of not sure, but I do like the fact that after making new highs for a few days, for months and months, many months, in fact, this continuation contract has made a new high since January of 23. That's a long time, damn near 2 years. Long-term trend seems to be up, period. Down move to support, small. Next move, new high ground. And we're looking at a stock that Ninja Traders North American Business Manager asked me to take a close look at, and it caught my interest because this looks like it's building a very large, major long-term bottom. This SQ, I think they produce a stock. I think they produce little tiny credit card swipes that plug into your cell phone, something like that. I've seen a couple of those. Very convenient, very small, very quick, very nice. If I'm right. Otherwise, I really don't care. I mean, it could be a commodity or forex. I don't care. I read charts. I don't care if it's a company or whatever. Crypto doesn't matter. Now, it's got a little bit more to go until it breaks out above this yellow line, which is horizontal at 89.80. A close above that would be considered a long-term breakout, but consider this. We're already above the highest high that was made back in March of this year and getting up above there again. The uptrend doesn't seem to have stopped, and I really should have probably drawn in this little line right here because that seems like a shoulder. This is the head of the formation, and this would be the last shoulder low. Fairly nice timing, fairly nice levels, price levels. Neckline slanted downward fairly steeply, but not, out of the question. And when we broke out, we pretty much held the neckline, although it did close a little bit below it at least once. But that's okay, as long as it pops back super quick, which it did. And another test of support, the line, which, you might even consider dropping it down a little bit like that. But then this rule is being violated slightly, but not too much. That actually looks a lot better, but again, it's not supposed to be quite that low. That's supposed to clip that high right there. And if I lower it, that looks great about the test of the neckline, a gap up above the neckline on a breakout, classic, classic, classic. This is just a hair lower than what I would expect. The minimum upside objective on this bottom formation has already come to pass. You measure from the lowest low on the same day straight up to the neckline. That's your stick, so to speak, your measuring stick. And from the breakout level, which is right there, the minimum upside objective would have been right there. It's already come and gone. So I'll just leave the formation. Now, I'm liking this. Long term, looking real bullish. And lastly, let's go back to E-mini real quick, see what's going on. And might be easing down very slightly. Looking for lower levels, a little bit bearish in stock indexes. You guys have a great Monday. Profitable trading to you.